Hi, Assalamualaikum. My name is Izzati binti Abdul Jalil. Today, I and my friends will talk and discuss about takaful. In this presentation, we will discuss about features of the instruments, Sharia principles, comparison with conventional instrument, and case study for takaful. Hi, today I will share about takaful. Takaful is a type of insurance that follows Sharia compliance, which is members in takaful will contribute money into a pool system and invest it for future security. Takaful is a branded insurance that can offer cover in life, health, and general insurance needs and applied by customer. Any claims that made by customer will be paid out by takaful funds members in takaful plan. Based on the cooperation, mutual assistance, and shared responsibility, which this system will avoid any harams elements such as gharar, unset riba, and mindset, which that is a gambling that prohibited in Islam. Next, this takaful have two types of insurance, which is general takaful and family takaful. General takaful will cover in non-life insurance like health, motor, property, and liability insurance. Then next is family takaful. This takaful is Islamic insurance that protect and cover for death, disability, or long-term service, while adhering to Sharia Islamic.
Hi, my name is Atika. I will explain about the features of the takaful product. Transparency and fairness are important principles in the takaful system. This ensures that participants have a clear understanding of how their contributions are used, managed, and distributed. These principles are essential to foster trust and confidence in the takaful model, which is built on cooperation and shared responsibility. Among them is clear communication of contribution and fund allocations. Takaful operators must clearly inform participants about the breakdown of their contributions. This includes how much goes into the risk pool, tabaru, administrative fees, and the portions allocated to investment activities. Participants should also know where and how their funds are being used. This includes the investment made with the funds and how this investment must comply with Sharia principles. In addition, takaful operators are required to provide participants with clear and regular updates on the performance of the fund. This includes detail of claim payments, investment return, and the status of the overall fund balance. Joint responsibility is a fundamental feature of the takaful system, promoting a spirit of cooperation and solidarity among participants. This principle encourages individuals to collectively bear the financial burden of unexpected losses and fosters a sense of community and social welfare. The focus of joint responsibility in takaful is the principle of tabaru, which is donation, where participants contribute to a common pool with the aim of helping those in need. In takaful, participants do not only pay for personal protection, but they contribute to a shared pool of funds. This pool is used to assist any participant who faces a loss, whether due to illness, accident, property damage, or other events specified in their policy. In addition, rather than each person bearing the full financial risk of an event, the risk is also distributed across the group. This collective approach ensures that no one person faces financial hardship during a hardship, as the burden is spread among many participants. Takaful is not just a financial product, it also has a long history in the principle of social welfare and corporate social responsibility (CSR). The structure of takaful, which emphasizes mutual assistance, risk sharing, and community support, naturally aligns with the broader goal of promoting individual well-being and contributing to the development of society. Among of the characteristics of takaful fostering social welfare and corporate social responsibility (CSR) is promoting individual well-being by offering financial protection for all. Takaful provides financial security to individuals and families by offering a safety net in times of loss or hardship. Whether for medical expenses, property damage, disease, or disability, takaful ensures that participants are supported when they face unexpected events, safeguarding their well-being and helping them maintain a dignified life. One of the characteristics of Takaful is customization and flexibility in offering coverage. Takaful allows participants to design policies that are tailored to their unique condition. This flexibility ensures that it is suitable and cost-effective. This can allow participants to focus on what is most important to them without paying for unnecessary elements. For example, tailoring coverage to the needs of an individual or businesses. Takaful participants, whether individuals or businesses, can choose from a variety of coverage options to create a plan that best meets their specific needs. For example, individuals may want a policy that covers health, life, and disability, while businesses may need coverage for property, employee health, or liability. Furthermore, the contribution amount is flexible. Takaful operators allow participants to adjust their contribution amount based on their financial capabilities. This is particularly useful for individuals or businesses that may experience fluctuating income or changes in financial status over time.
Hi, my name is Iylia and I will talk about my point, which is mutual cooperation and shared responsibility. So, the core concept of Takaful is based on mutual assistance and operation, so which is called ta'awun in Arabic, where participants contribute to a pool of funds. This pool is used to support members in case of a loss, such as accident, illness, or damage. So each participant contribution is seen as a form of donation, called tabarruk, not a premium for a service. The idea is that participants are helping one another in time of need. Okay, the next point is Sharia compliant investment of funds. So the funds collected by Takaful operators must be invested in Sharia compliant ventures. This means they cannot be invested in industry that violate Islamic principle, such as alcohol, gambling, pork related to business. So the investment are directed towards ethical industry such as healthcare, education, infrastructure, and technology to ensure that the return are permissible in Islam. The third point is the prohibition of maisir, which is gambling. Maisir or gambling is also prohibited in Islam. This is because gambling involves pure speculation and luck, where one party gains at the expense of another. So Takaful is structured to avoid any speculative nature, ensuring that there is no element of chance in the contribution or payout. So the pooling of resources is based on mutual responsibility, not on a random or uncertain event. Okay, the last point of my slide is the prohibition of gharar, uncertainty. So gharar or excessive uncertainty is prohibited in Islamic finance. It refers to situation where the term of a contract or the outcome of a transaction are uncertain or ambiguous. In Takaful, the terms of contribution, claims, and distribution of funds are clear and well defined. The participant knows how the contributions are being used and what the potential benefits are, reduction uncertainty.
Next, I will share the comparison between Takaful and conventional instrument. First, in investment. In Takaful, investment activities will be carried out by the Takaful operator that follow Sharia compliance, while conventional will carried out by the conventional insurer may not be Sharia compliance. Next, for the ownership and structure. In Takaful, members collectively own the risk pool and the operator manage it, while for conventional is owned by shareholders who aims to maximize their return. And lastly, for the accountability and transparency. In Takaful, it's more transparent as members have a right to know how their funds are managed, while in conventionals, it may have limited transparency, especially in investment decisions and profit distributions.
Assalamualaikum warahmatullahi wabarakatuh. My name is Huda binti Abdul Rahman, and I'm going to be presenting about case study of Takaful. First, we have Takaful and micro Takaful insurance. Case study of Malaysia, reference to the Takaful Ikhlas company. This case study focus on development of Takaful and micro Takaful insurance in Malaysia, specifically reference to Takaful Ikhlas, a leading Takaful operator in Malaysia. It's explore the evolution of Takaful as an Islamic alternative to conventional insurance, which is emphasized on offerings under family Takaful, which cover risks to the family protection such as death, disability and critical illness. The study will discuss about how micro Takaful, a variant designed for lower income individual, is playing a pivotal role in expanding coverage to underserved community. There were three key findings in this case study, which is product innovation, micro Takaful focus and challenges. I will start with product innovation first. The study demonstrates that Takaful Ikhlas has made strides of offering diversified family Takaful product to cater to various needs within the Malaysian Muslim community. Product has been designed to ensure compliance with Islamic principles while offering valuable financial protection. Second point is micro Takaful focus. Micro Takaful especially important in Malaysia diverse society where low income group often lack access to traditional insurance. Micro Takaful products are structured to provide affordable premiums and coverage for small scale risks. The challenge is, despite the progress, the study will highlight several issues, which is first is low awareness between Malaysian community. There is significant gaps in consumer awareness about Takaful and its benefits compared to conventional insurance. These gaps need to be addressed through improved education and marketing. Second challenge is cultural barrier. Some Muslims may still be hesitant to adopt insurance products due to misconception or lack understanding of Islamic financial principle. So the conclusion for Takaful and micro Takaful insurance is the study concludes that there is a strong potential for Takaful, particular micro Takaful, to expand in Malaysia. However, achieving this requires addressing awareness gaps, promoting educational on Islamic financial principles, and ensuring that Takaful product remain affordable for low-income population. The second case study is Takaful, a review of performance, issues and challenges in Malaysia. This case study will provide an in-depth review of the performance of the Takaful industry in Malaysia, delve in the various operational models of Takaful, such as pure Wakala models and the Mudarabah-based model, and assess their impact on the market. Study discussed that performance of Takaful companies identifies challenge in market penetration of offering potential strategies to improve Takaful position relative to conventional insurance products. Key findings on this research is market performance, operational models, challenge in the market. So I'm going to start with market performance first. The study highlight that Takaful has made substantial growth in Malaysia, but still lags behind conventional insurance in terms of market share. Family Takaful in particular has gained popularity but face challenge in competing with well-established conventional insurance players such as Prudentials and Generali. Operational models about this takaful is two major models used in Malaysia is Wakala model. Wakala model is in the model, the operator takaful company is paid a fixed fee to manage the takaful funds. It is increasingly favored by takaful operators due to its simplicity and cost effectiveness. The second operational model is Mudarabah models. Under this model, the takaful operations and participant shares in the profit derived from investment made with the takaful fund. This model is more profit sharing oriented but requires a higher level of trust and transparency. Challenge in the market for this both takaful is limited penetration. Takaful penetration remains low in Malaysia compared to conventional insurance, even though it's offer a viable alternative for the Muslim population who are seeking insurance product that align with Islamic principles. Regular challenge. Despite regulatory improvement, there are still ongoing challenges related to the harmonization of takaful laws, regulations and Islamic financial standards, which can affect the industry goals. It also has a challenge on consumer trust, because building trust among consumers remains a key challenge. Takaful companies need to better communicate how their products work, practically in terms of profit sharing, risk management, and ethnic investment principle. So the conclusion for the second case study is the review suggests that while takaful in Malaysia has immense potential, its growth is hindered by a combination on market, regulatory and consumer-related issues. The study recommends strategy for greater education, improve product offerings and better regulation framework to help the takaful industry reach a full potential.
Takaful is a Sharia compliance insurance scheme. Takaful in Malaysia and elsewhere is relatively new compared to other sectors of the financial industry, but it has enjoyed robust growth. However, despite robust growth, the penetration rate for takaful in Malaysia or elsewhere remains small. This shows that there is a huge opportunity for growth in the future. However, it cannot escape its own challenges. There are challenges faced by the takaful industry in Malaysia and elsewhere. Among the challenges, starting from the elements of competitions, business models and processes, changing customer needs and demands for the better and more efficient product choices and delivery channels. In addition, more customer-friendly practice from takaful operators and need to face serious threats to the profits arising from the recent global financial crisis. In the context of Malaysia as a committed government should promote takaful and make Malaysia the takaful and retakaful hub in Southeast Asia with a briefing on the takaful industry in Malaysia and elsewhere. Overall, takaful offers a valuable, ethical alternative to conventional insurance, providing exclusive financial solutions based on social responsibility and Sharia compliance. It is gradually gaining recognition worldwide, especially in Muslim-majority countries, although its expansion may still require addressing legal and educational barriers.
So, that's all from us. Thank you.